Hey, Money Masters and Treasure Hunters, welcome to November 20th. Tom O'Brien Show. I'm your guest host, Steve Rhodes, filling in for Tom for the day. Hope everyone has had a great Thursday. Let's make sure that we have a wonderful, wonderful evening. Make sure that you hug somebody. Hug all those folks that you love out there. Our call number is 877-927-6648 internationally, 727-445-1044. For those of you that may not be familiar with me, I kick things off. Well, I don't kick things off anymore because the Hotel California opens at 8 o'clock. Our man John Logan kicks things off. I do 2 hours from 9 to 11 each and every day. Those shows are archived on Channel 9 and Channel 10 out here. So let's get right to these markets. Right now, Dow's up 6 points. S&P is up 1. Composite up 20. Russell 2000 up 9. I got a number of emails based on the first couple hours I did today, and talking about my positive attitude and then also my bullish outlook. And so some folks were like, how is it that I could have called a bottom in October? Why is it that I have such a bullish outlook? Because what I mentioned is that this morning, as we were taking a look at the futures markets, so let's just recap for a moment where we are and where I believe the markets are going to, and the importance of really today's low. If we take a look at the Russell 2000, this is a 120-minute chart, so we're just going to backtrack just for a moment. If we take a look at this chart here, if you watch us on Tiger TV, in HD no less, so that's a beautiful thing. And this chart here, I'm just going to pull it back to the October lows. Now, in this case here, it was October 12th, October 13th, when the Russell 2000 made its lows all the way up here. It's made just some very shallow retracements. Now, this is the first A to B equals CD down pattern that the Russell 2000 has made. If you were an aficionado of H.M. Gertley, and quite frankly, you should be out here, and we just had absolutely one of the largest moves that we have seen, both vertically with regard to the V-shape, 13 straight days in a row with the Dow making highs. Now, that's not all time. There are other periods of time where the Dow has gone on. In fact, back in 1987, it actually did. I think it was 20 sessions in a row. We can take a look at all that data. But my point is, if you were a person that believed in the Gertley pattern, and I'm one of those folks, well, what we just did here yesterday and today was just confirmed the next Gertley buy pattern out here, because we had our first A to B equals CD to the downside inside the week indice of all of them, and that is a buy signal. And when we did this here, this is part of what I'm going to be teaching to folks in my course here. It's a 7-week workshop that begins this coming Saturday. So I'm going to teach folks these patterns, and it doesn't matter what level you're at. My whole bailiwick is being able to take things that are complex and make them simple. That's what I'll do, and that's why I'm also staying with you for a 7-week period of time. But bottom line here is we saw a hammer candle that actually formed at the 1-to-1 A to B equals CD to the downside. Now, that occurred yesterday at 12 noon. Yeah, and this morning here we saw prices kind of push down, couldn't bust through that level out here. So we've got a confirmed Gertley buy pattern. Now, oftentimes these can turn in their own A to B equals CD patterns to the upside, but I just want to point out the what's going on inside the Russell 2000 on the 120-minute time frame. If we actually go over and take a look at the daily chart, just to put this in perspective and utilize all the different tools that we have here at TFNN, of course, the daily chart made one of my favorite patterns. We'll be reviewing this during the workshop as well, and that is where price moves lower with less relative weakness out here. That's what happened as the lows were being formed inside of the Russell 2000. Those lows here coming in on October the 13th. Confirming pattern that took place on the 14th and then on the 15th, that little second opinion. Well, guess what? Only in the third wave to the upside out here, and we just made a Gertley buy pattern on the 120-minute chart. Now, why am I a little bit perplexed? Because I've been looking for the market to actually move down a bit after that October 31st move to the upside. If you caught the show that Tom and I did on that Friday, what I was really looking at, and I'll show you right now. Actually, let me do this here. It makes it a little bit easier to actually put the slide up here. This is the slide. This is the pièce de résistance out here. This is why I can tell you, this is why I can say with conviction that this market's going to go up into the end of the year, maybe beyond that. For the last 43 years, this is the data for the last 43 years. Now, what I've done is I just simply took out 1987. I didn't need the October data messing with this chart out here. So if you were a person that believed that chart patterns repeat, and I'm certainly one of those, and I know that you are one of those as well, well, if that's the case, and I were to ask you the question, hey, when does the S&P 500, this is the S&P 500, by the way, when does it traditionally make its low during the 6-month unfavorable seasonal cycle? That means from May through October 30th. What would you have said? Well, if any of you would have said that actual date comes in right around October the 9th, you would have been right. On average, that's when it comes in. Now, we don't need to get date specific here, but when that low comes in, and we saw ours come in on October the 15th, 16th, 13th, if we take a look at the Russell 2000, you think that's coincidence? No, it's not coincidence. It's when the lows get made before the Santa Claus rally actually begins. And then what happens? Price moves up into the early part of November. This year here, we had that election that was going on. That actually made sense. November 2nd is the actual date out here when that high should have been made. Well, October 31st, we had that big push up because of the Bank of Japan and so forth. Then what happens is the market moves down. It moves down one more time. That one more time, actually, the date, I had been saying to folks, November 21st, tomorrow. I said that back on October 31st. No, I'm not really date specific. If you wanted to get date specific, you'd say November 17th. That's on average when that actually takes place. So now when we take a look at what's going on, now on top of that, just to give you a feel, let me just put this back up here, just to give you a feel, it's really not me that's bullish. It's the market. It's just simply reading the signals of the market. If we allow ourselves to read the information that the market provides to us and be willing to change it at any moment. If the market overnight, we see some big sell-off or something happens, I'm always willing to come back and start with a clean slate and see what's going on. Now, in the last 40 years, this is a chart that I put together here. Marty Zweig has a lot of great tools and indicators out there. In the last 40 years, there's only been 4 of his Zweig thrust signals out here. We've seen 2 basically in the last year. The last one came back in October of 2013, of all things. Now, remember, I just went through a chart that showed that the market makes its lows in October, certainly over the last 40 years. And October of 2013, we get a major bottom signal, a Zweig market thrust signal. Well, guess what we got this time around? I don't have it notated on the chart. We got the same gosh darn thing out there. So this chart, it doesn't get too much more bullish than this, and that's why it's not really me. It's really what the charts are saying out here. So what does that mean? What does all that mean? Well, if we go take a look at the S&P 500, let's take a look at the S&P 500 index. It's flat today. No big deal. We've seen a series of doji candles. Those typically mean the market is tired. That's why I believe that the market was going to pull down. I was willing to go ahead, and I still am. The school's out here just yet. I'm kind of on the fence. I'm really interpreting this here. We have in the case of the S&P 500, you get these dojis out here, but prices up above those little dojis in Stevie's window out here, and that says, okay, maybe the A to B equals CD to the upside, which is what's going to take place out here. And by the way, that A point, just to give you an idea, and this is what we'll be covering during the workshop here this coming Saturday, which you're welcome to attend. I'd love for you to attend because I will take the complex and I will make it so simple. I will show you things that are sitting in front of you. It'll be like with a great artist, with a great restaurateur out there, a great chef. If we take a look at this A to B equals CD to the upside, we go take a look at the ETF structure. We got confirmations out there. Forget about those high volume moves to the downside. Quite frankly, I've got another chart out here. I don't know if I can pull it off today that shows that all this move in the VIX and the move to the downside, it was really all Ebola related. And Ebola, Ishmola, it's now at least out of the market, out of the U.S. for the time being. 1-1 A to B equals CD says 2102. That is not where the S&P 500 is going to top out. And I'm not even saying top out, but move to between now and the end of the year. Now, it's more likely headed to 2178. And don't forget, we've got a measured move inside the S&P 500 that takes us to 2350. So we cannot rule that out. So we've got history on our side. We've got Marty Zweig's thrust indicator. We've got that on our side. We've got one of the strongest V-shaped bottoms that has formed since March of 2009, if not the strongest out here. We should not ignore these messages. If you're bearish, be absolutely careful out there because even the best of signs just seem to keep failing. Right now, your best sign here would be if the composite closed right here, right now, because at this stage here, if we take a look at summation index, it's still just turned down slightly. But let's face it, it's really flat for the day. So there is trouble in River City under the covers, but that trouble can be resolved very, very quickly. This is the Tom O'Brien Show. I'm Steve Rhodes. I hope you are having a great Thursday. Thanks so much for joining us. We'll absolutely be right back. We're going to go out to Las Vegas to our man, Andy Heck. We're going to go take a look. We'll talk about A to B equals CD patterns. Let's go take a look at natural gas when we get back. We'll be right back, folks.